Thank you so much. Thank you. Excellent. Highly appreciate the applause beforehand. I hope we managed to fulfill your expectations. So thank you very much for being here. And we have an excellent panel today. We will explore a lot of subjects. I believe it's well balanced, the panel. It's representing investment funds, asset management, development, advisory, tax, and market-facing perspectives. I would like to briefly introduce the panelists. We have Jack Wakil, Executive Director of Mouflon Investment Fund, who brings the investment fund perspective with experience in property investments in Cyprus and Greece, as well as broader exposure to real estate, finance, and investment sectors. Welcome, Jack.
Thank you.
Fivos Theodoru, Head
Hello,
of
Stella.
Sales, Head of Sales and Business Development at Property Gallery Developers and Constructors, brings the developer and investor-facing perspective with significant experience in international real estate and family office clients. Anna Haralambous. Hi, Anna.
Thank you, Stella.
Thank you. CEO of Remax AI and Robur Asset Management. Anna brings a strong combination of real estate law, corporate advisory, banking and finance, and technology-driven asset management. Marios Kapnisis. Hi, Marios.
Hello.
Senior Manager at KPMG, brings the tax, regulatory, and advisory perspective, which is critical, as we heard also from the previous panel, when international investors consider how to structure their investments. And last but not least, Alkis Nicolaou, CEO and Assistant Sales Agent at Remax, brings direct market-facing experience and insight into how buyer behavior is evolving on the ground. So I will start with Jad. From the investment fund perspective, from your perspective as an investment fund professional, active in property investment in Cyprus and Greece, what is driving the increased interest of family offices and institutional investors in real estate today? Is it diversification? Is it inflation protection? Is it income generation? Is it lifestyle? Is it all of the above? Is it something else?
Well, it's funny that we have to answer the question under the scheme of what's happening now in the world. Everybody is aware of all of the troubles that we're living through. And institutional investors, traditionally in real estate, they have a big allocation for real estate. Real estate is one of the big parts of their portfolios. And what they look for can be different in different markets. Now, just to put it more specifically, in markets like Cyprus or Greece, they're looking for differentiation and they're looking for an upside in return. Which is not always easy to achieve. I mean, but because there's market fluctuation, because there's the specificities of each economy. So it's not always easy to achieve. When we started in Cyprus, the story was the country was out of a crisis. And after a crisis, there's a recovery. And we started back in 2016, 10 years ago. And that was the story of Cyprus. The story of Greece is a bit different. It's focused more on Athens, where there is a lot of focus now on upgrading the old stock of real estate. Athens is a relatively big city, but it's also a city that gets a lot of tourism. And it was starting again from a very low basis and has been increasing for a while now. And it has been attracting more and more international investors to come into Athens. So from our point of view, just to keep it within the realm of these two economies, institutional money brings to the table something that usually lacks in small countries. So Cyprus and Greece are considered frontier markets. What we mean frontier as in the frontier of Europe. They're not the mature economies of France or England or Germany or whatever. And people who come to these frontier markets are looking for a differentiating factor. They want something that will give them the upside. They want to have the added benefit. Which is also a challenge, but it's a reward for the local economies because institutional investors also bring in some professionalism, meaning that they have track record elsewhere, they understand the sector as a whole, and they usually invest in larger scale projects. So it's not like a couple of guys who come together and buy a plot to build a building. In general, no, it's something where the sums involved are bigger and the strategy behind it is different, and they bring in teams of professionals who are handling these investments and these assets. So this is the factors that differentiate institutional investors from regular investors. And this is what all of the institutions are looking for. So they want to build their portfolios in these countries. They come in the first and they test the waters, let's say. And if they like it, then they can get involved more and more. One note on that, in Cyprus specifically, there is, the beginnings of institutional investors in real estate, but it's still at the very beginning, I believe. And what you see is that the big projects, especially the big residential projects or some of the hospitality projects and so on, are undertaken mostly by developers.
Yes.
Now, without delving into too many details, because this is due to some economic factors, some legal factors, and so on and so forth, that has not yet brought enough institutional money into Cyprus. Whereas in Greece, it's actually the other way around. It's the institutionals that have really brought up the portfolios of real estate in Athens in particular, because they're pumping a lot of money in that economy. And the locals are always in the sector. You cannot just put the locals out, but it's very important to understand that this is something that is potentially a driver for the sector in particular and for the industry as a whole.
Thank you so much. Fivos, from a market and investor-facing perspective, which real estate segments are currently attracting larger scale or more strategic investment interest in Cyprus? Are these residential, hospitality, offices, logistics, mixed, student housing, or other segments?
Okay, thank you for this question. Well, in Cyprus, we have every region, Paphos, Limassol, Nicosia, Larnaca, with different characteristics. But in the overall, the real estate in Cyprus is multi-segment. And obviously, we all professionals, industry-related in this room today, we experience that the residential still dominates the market. Is the main sector of the industry of real estate, and we see that there is strong demand nowadays from incoming flows from foreigners, expats. Relocation is contributing a lot towards this sector. We have investors, and I'm happy to say that we experience nowadays, apart from foreign direct investment, we have active local investors. Okay. It's a good sign for the industry, and it's good to know that locals, they have an attention for real estate investments. Looking to the residential perspective, we need to see the target of the investors. So we see the trend nowadays, I believe we all agree, it's apartments in urban or coastal developments. Main focus is income-producing assets, yields, rentals. On the same time, Cyprus is evolving, is moving towards the high-end luxury sector of real estate. And we as Property Gallery, we are dominating, I would say, with all my confidence, the real estate market with luxury sector. And another thing that we see as a new trend coming in the next few years ahead when it comes to the residential, it's the compound developments, organized developments, gated projects with facilities, with infrastructure, so you can have a kind of a city within a city. It's flashing a lot nowadays within the promotion activities of developers, and it's something that we believe it has further growth. Another sector of real estate, obviously tourism is one of the major pillars of the economy as well. So hospitality and short-term rentals, we see that it's a sector that gets the attention for investors. As a matter of fact, we see that the two international airports, Larnaca and Paphos, they are currently under an expansion process. So we're expecting to see more foreigners, tourists coming to the island. Therefore, there will be expected to be more demand for tourism and short-term accommodation. a new trend that we start to experience in Limassol, and I think soon will shift in the other cities. It's mixed-use developments. So it's a combination between retail, commercial, residential, all within the same master plan. This gives to the investors diversification and also the option to utilize density. Obviously, talking about mixed use, we include commercial and office space, Class A buildings. It's one of the other sectors that they are high in demand. We all encourage the incentives from the government, and it's very important to see the policies and the regulations involved with headquartering, because headquartering, it comes with offices and in extent with going back to residential real estate. A new pillar, a new segment, a new real estate asset is logistics. It's early stages, but we all agree, I believe, that there is room to grow because of the location, of the shipping, and logistics. I see also a great potential in the future with data centers, which is engulfed at the moment. And also student accommodation is something that gets the attention for investors. And student accommodation, it also falls for expats when we target the digital nomads. So it qualifies both for students and digital nomads. So in the overall, this is the structure that we see real estate operating today with different asset classes.
Great. So every segment out there, we can cater for everyone.
Yeah.
Thank you, Hivos. Anna, as more sophisticated capital enters the real estate market, what changes in terms of governance standards, due diligence requirements, and transactional structures? What do institutional investors and family offices expect before committing their capital?
Thank you, Stella. I think part of my question was answered by Jad before, because we're also cooperating, and I understand he represents the fund, so he already mentioned a lot of it. I would say that we cannot argue that sophisticated capital pushes the entire market toward more high standards. So higher standards. So this is something that we need to have as a base. We cannot say that there is no way family offices or institutional investors to proceed with an investment without proper and reliable data, a proper risk control, and also a professional asset management service. So this is the base. Of course, they are looking for transparency, reliability, and proper control risk. Regarding governance, we can say that we see formal structures, independent oversights, clear decision-making processes. These are the part that all the family offices and investors are looking for. Of course, due diligence is rigorous, and we see more and more in the market the increased use of sophisticated vehicles, that they have a clear exit strategy, a proper asset management way for a safe investment. So these are the basis for the institutional investors. The question to be asked, and something that Jad answered, is our market ready for it? Are we there? We could say that we made a progress, but our market is not yet mature. We have a long way to go. So we understand the difficulties when these investors are coming, so it's very difficult. It makes things more complicated or more demanding. But if we stick on it, I believe at the end we will have a more transparent environment that will help everybody and will help our market with transparency and trustworthy to have more serious and more investors coming, that it will help our entire sector as an overall.
Thank you, Anna. I agree with you totally that transparency and governance, they also bring trust. And this is what we also see in the banking sector. I think the number one is for customer to trust us. Thank you. So, Marius, from an advisory standpoint, what are the key tax, regulatory, and structuring considerations that international investors typically assess before investing in Cypriot real estate?
Thank you for the question. I believe all three key issues you highlighted, tax, regulatory, and structuring considerations, are interrelated when you are talking about family offices or institutional investors. But I'll start with the regulatory perspective. I mean, I think Jad also mentioned it in the beginning, but the key thing for an investor, either institutional or private investor, is security and efficiency. So in the security part, I think overall we're doing really well. I mean, we have a very developed land registry system. You know, we have a common law application of our legal system, so everyone knows what they're buying in theory, and it's a structured, proper way. Where we are lacking, it's the efficiency part, I think. Especially when you are talking about greenfield developments, as mentioned earlier, where you need to secure planning, building permits, or change of uses, and the various other related matters. So in that aspect, I mean, and especially with the recent changes we had in the governance system on the local level, with the transfer of powers from the local municipalities to the central EOA, as they are called, we've seen that we have big inefficiency. So in that aspect, we are lacking behind. And that's a deterrent, I think, for a lot of investors. It's something we have actually seen over the years. I would also agree with Anna that we are an emerging market yet, or a developing market. So there is still a long way for us to go until we reach the maturity of more developed countries like UK, Germany, or Spain in that aspect of the efficiency, let's say. Now, structuring a tax, I think they are directly related depending on each individual circumstances. And even despite the recent changes in the tax reform that came into force from the beginning of this year, I mean, we still have one of the most attractive tax systems around Europe. So we are still an attractive place for our institutional investors to come. I think that's the key point that makes individuals or institutional investors to look at Cyprus first. And then that is directly related with structuring, obviously because of the various double tax treaties we have, the various structure that can exist from a prospective investor. It could be a very efficient tax system for them, and it could be a very good investment in the long term, because, I mean, especially institutional investors they don't consider the yields, let's say, or the purchase price. They consider the medium term, and they're looking for the exit price. So an efficient tax system or tax structure is helping with that. So from that perspective, I think tax and structuring are interrelated, and depending on each circumstance, you can structure them efficiently.
Thank you, Marios. I think it's great that we have identified the gaps and that we are trying to do something about them, and that we have, countries that we're aspiring to be like. You mentioned Germany, etc. So Alkisti, based on your direct interaction with buyers and investors, have you observed a shift in the investor profile coming to Cyprus? Are investors asking different questions today compared to the past?
Thank you for having me, first of all. Well, based on the feedback I received personally, as well as through our foreign offices in Cyprus, we see that on one hand, we have young entrepreneurs coming to Cyprus to invest. We have tech professionals, which is a mix that we didn't used to have like 5 years ago. And on the other hand, we have very big investors, big developers coming to invest and do really big projects in Cyprus with a minimum of 20,000 square meters of land. So yes, there is a shift in the profile of the investors coming. And they do not only come for the lifestyle and the safety, which are always in fashion, but they also see the potential and momentum of Cyprus. The fact that we had an average of 4% GDP growth last year. We had a boom in tourism. We had 4.5 million tourists last year, which is almost double than before. And 14% increase in the revenue from tourists. So they see this potential and they are investing to diversify their portfolios and to gain from this momentum. The questions they ask is what are the rentals we can get from this property? What is the rental yield we can receive? Will it keep its resale value? And which are the areas that are underdeveloped and still have future growth? And whether the properties are sustainable? These are some of the questions they ask.
Thank you. Very informed questions. And I think technology and artificial intelligence, now they are helping everyone to ask the right questions, I think. Thank you, Alkisti. So I'm coming back to Jad with the risk of him answering
I'll try not to. Sorry, guys. I'll try not to answer these questions.
How does the entry of more professional capital influence investment and pricing, influence investment discipline? Does it contribute to a more mature market, or does it also increase the risk of overpricing?
For sure, it does help to mature the market because it brings in with it professionalism, obviously, like we said before. And it brings with it a certain search for quality. And what I mean by quality, not like the quality the end finishes, but quality meaning finding the right investments to invest in, which usually, in terms of institutional investors, it underserves segments in an economy, meaning that institutionals come and try to sniff out what is the opportunities that's going to come in 2-3 years, not what is booming right now.
Yes.
That's on the one hand. And on the other hand, institutionals also invest in bigger scale projects. And with bigger scale projects, you need basically the professionalism, you need all of the structuring elements, you need all of the KYC compliance, legal standing behind it, so that you are able to make an investment decision that is safe for yourself and for your investors, so that you know that you have a path from the beginning, from the inception of whatever investment you're making until you get the exit. And this drives the market in general. I don't believe it brings an increase in the prices per se, because institutional investors, they are searching also for efficiency.
Okay.
And when you have a dynamic in the market and the market becomes more efficient, it means that it pushes everybody to become a bit more professional and more efficient. And in that sense, it means that everybody tries to have better processes. They start to have more control of every part of the costing of their investments. And therefore, it kind of streamlines more or less the costing elements. The macro view, meaning that the effect on prices is not always in the hand of the investor. You have macro elements like exactly what's happening now.
Yes.
You have market costs. We're talking about development. Half of the stuff that you buy for development is a commodity. The price just varies according to what's happening in the market. So they don't have an ultimate control, but it brings an element that helps to streamline. And by doing this and making the other competitors in the market more efficient, I think somehow it's a stabilizer which removes some of the volatility in the market, let's put it this way. So it's not necessarily going to keep the prices down, absolutely not. Investors are here to make money, let's not kid ourselves. But at the same time, it kind of removes a bit of the volatility, and therefore it helps overall like the sector to advance. And I'm talking here specifically about Cyprus because over the past few years, we've seen a gradual improvement in the quality of everything that's been happening, from the developments, from the projects that are being offered, from the investors who are coming in with a different mindset. And therefore, this has, I think, put us one step ahead of where we were 5 years ago. And hopefully this will continue in the future.
Definitely. And because we are referring to institutional and family offices investors, they definitely know the risk and return and the volatility, what volatility to expect. Fivos,
Please.
back to you. How do developers need to adapt when engaging with family offices or institutional investors rather than traditional individual buyers?
Okay.
And what do these investors typically expect to see before taking a project seriously, or vice versa, what don't they want to see?
Okay. Well, I will reverse it a little bit. I wouldn't say what we need to adapt, because it's been a while now that we have a connection and relationship with family offices. What I would say, it's what we need to understand about family offices. So we need to basically understand what is family office, because we have single family office, we have multi-family offices. So we need to see the philosophy and the strategy that they represent for their high net worth individuals, that the approach is totally different from the traditional way of doing real estate, because we're not dealing with an individual buyer or purchaser that you're selling a property and then that's it moving forward. Here we are building trust, we're building relationship with the account manager of the family office. We need to act as portfolio or investment managers. And we're looking for a long-term relationship, because having a connection with a family office is not a one-off transaction. It's something that is ongoing. So developers, they need to be very transparent. Family office, like I hear with the rest of the panelists, they are financials oriented. They see the numbers. Chad is talking about commodities. So we need to have a clear structure of financial, the returns, the exit strategy. Also, we need to have transparency with the projects that we are disclosing to the account managers of the family offices. In terms of the licensing, the master plan, the asset that we are presenting to them. And obviously, the account manager of the family office needs to feel the trust that they're with the right people to make a one-stop shop service all the way through the financials, the due diligence of the project, the acquisition, then delivery. It's very important for the developer to deliver what they commit with the investors. And moving forward is the after-sales relationship, including the exit strategy. So very delicate family office. You need to build trust, connection, and sky's the limit. It's a never-ending relationship.
Definitely.
If I may add, Stella, one point.
Yes, please.
Family offices actually have evolved over time, and now they have their own internal teams. So in the past, they used to make investment decision at the board level, let's say, on a strategic basis, and then allocate. Nowadays, they don't do that. They also build their own teams, especially in real estate, because real estate is such a big allocation of family offices that they have their inward teams who are working on within the family office.
Yes.
And these teams are, the responsibility of these teams is to go out and find where the next opportunities are. Okay. This makes it even more challenging for developers, because they need to accommodate to people who have experience in this market. So they're not just the professionals themselves offering this opportunity to the investor. Yes. They are the professional who's offering investment to the investor, but through some kind of oversight of the family office itself. So this needs to have a proper adaptation to not think about the traditional developer. I put my own money, build my own building, and that's it. It's a completely different mindset.
We are evolving, and we are evolving together, basically.
Exactly. Yes. Exactly.
So they're hiring talent, and they know how to govern their finances.
Precisely.
And you need to be up to the task. So Anna, how do you see data and technology, which was a very popular theme today, changing the way real estate assets are sourced, assessed, managed, and even presented to these investors?
I think we all remember the time that we were looking, not all, some of here, our audience are very young, but the time that we were looking for real estate through the newspapers and from mouth to mouth. So technology, of course, is changing real estate.
You don't look old
We
enough
see
to
it.
remember that, Anna.
Yes. I think you talked about AI and how this technology will help us during the next few years, but we're not yet there, and not because we don't have the technology, but because we don't have our data are fragmented, scattered, not yet fully clean, and also our processes are not digitized. We are still having processes that we are going to the land registries, to the AOA, to get permissions, to the building authorities everywhere in order to complete a file of a property, a due diligence, even if it's technical or legal. So we are not yet there. As soon as all these processes are digitized and all these data are cleaned, then we will have the full acceleration, and then we'll be the game changer. And imagine during the next few years, and I hope this comes soon, and because we are also very keen to having this, because it will bring transparency and will make the market more trustworthy, to having everything digitized. Like, I'm an investor, I want to buy a property, I can see through the criteria online, I can have the marketability report, the market insights, a legal and technical due diligence through my laptop or my iPad, and also the transaction execution and everything through our devices. So I think we're getting there. We are not yet there. I believe that at the moment, some of the information that we'll get through AI and through these platforms, maybe sometimes is not fully reliable. So we need to check it with the human factor, and something that we want to be. I want us to be a bit cautious about it, but we're getting there. And family offices and institutional investors are, of course, using and leveraging asset management and the way that they manage their properties through technology. They are also facing a lot of difficulties. So but the future will be that this technology and this information will not be only available to institutional investors or sophisticated clients. It's something that needs to be available to all of us, to everyone, all the participants of this market. So this will be the aim, and this will be my vision at least, and I hope we see it soon coming.
Yeah, I also hope that it happens soon, because it's up to the weakest link in the chain. I mean, we as Bank of Cyprus tried to digitize the mortgage loan, and we have a land registry that is not digital. So you can reach up to a certain point.
So, Stella, I think we're going back to the asset class I mentioned before. We need more data centers. So logistics is a room to grow.
Agreed, definitely. So, Marios, coming back to you, what are the key advantages of Cyprus that it offers to international real estate investors? And where do you believe the proposition could be further strengthened?
Okay. As I said, I think the key advantage for potentially most of institutional investors is that we are an emerging market or a developing market. So whoever comes in the short term gets the first mover advantage, let's say. I mean, we've seen recently one of the publicized moves was Blackstone investing in a hotel complex in Pavos. So we know we are there. We know we are on the map of institutional investors. And we see the overall investment from family offices across the island. So we know we are on the map. But I mean, generally, what we're getting is that, we have a very efficient tax system, despite the recent changes, which is still good and is still attractive across the European Union. Being part of Europe also helps. The overall lifestyle, I think, in Cyprus, it's a very strong suited point for institutional investors or family offices to invest here. Having a very dynamic workforce as well is something I think a lot of people are looking into. And the fact that, the past few years, as Alkis mentioned before, we have a lot of influx of new kind of people relocating to Cyprus or new kind of investors. So overall, I mean, we have the general package with, with our legal system, with the product we are offering in general. So there is a lot of advantages why would someone come here. But on the downside is that we potentially are quite small for the bigger players.
Okay.
So yeah.
So we're small for the bigger tickets and their exit strategies. Thank you, Marius. So Alkisti, looking ahead, what type of international buyer or investor do you think will shape the next phase in the Cyprus real estate market?
I believe the big players will shape the next phase of Cyprus because of their big size and the big investments, the large-scale investments they prefer to develop. They will have a huge impact on the product we offer in Cyprus. So because people are turning towards large projects with facilities like swimming pools, gyms, restaurants, all at their feet, sustainable developments, they will of course come, and even though we are a small place, their impact will be big because of the big scale of these projects. However, I also see a shift of investors towards resale properties due to the changes in the VAT percentage schemes that we have in Cyprus for properties above 475,000 and 130 square meters. Things are changing with VAT, so we see investors investing in resale properties that they can renovate and avoid the bureaucratic delays that they will find with the authorities of Cyprus. So I think that these are the sectors that will shape the future.
Thank you, Alkisti. We have 2 minutes, so for our closing, I would like to ask each of you very briefly, 1 sentence, to share your outlook for the Cyprus market for the next 3 to 5 years. You have a crystal ball. What is your outlook? 2 minutes, please be very brief.
I'll go first then. I think we're going to have a shift more towards city centers rather than periphery.
Okay.
Smaller units for sure. I think on the tourism or the commercial real estate, we have an upgrade of the offering in the commercial, meaning for offices. And potentially, I see a very big gap in the market for the upgrade of the touristic offering, meaning that international groups will start more and more wanting to come to Cyprus and create, upgrade the existing and create new.
Excellent. So positive outlook.
Positive, yes.
Phibos.
Stella, always positive outlook.
Always.
In the next, I would say, short-term period, 3 to 5 years, we're expecting to see more diverse foreign direct investment coming to Cyprus. It's already happening from what I hear on the panel as well. Still, there is room for further growth for new players in institutional investors. I believe what has happened and what is happening in the greater Middle East and especially in UAE, with all my respect, I believe that there will be investors shifting to Cyprus because there is a safety and stability, and we call it European Union.
Yes.
And in the overall, sky is the limit and always positive outlook.
I like that. Sky is the limit.
Yeah.
Stella, we are not, we are in the real estate sector, so we need to be positive. So we are always positive. We cannot say something negative. So I would say that we've seen the challenges that Cyprus faced through the past years, and we see our real estate is steady and growing. So this is, you have to see the past in order to see the future. What I would see differently, I believe that technology will help also the real estate market to make it a more international, more global, because in the whole world, with the availability of information, it will be easier for even investors that they are not interested in Cyprus, with the information that we have, easier to come and invest also in Cyprus. And I agree also with Phibos and Jad.
Thank you. Thank you, Anna. Maria?
Positive, for sure. But the overall feeling for me is that in the next 3 to 5 years, the market will be mature enough.
Okay.
And we'll be comparing ourselves to, the bigger players, let's say.
Oh, wow. I'm really happy to hear that. Alkisti?
Yeah, I see also a positive future for Cyprus. And I believe that life in Cyprus will become much more interesting with these new developments that are planned to become reality. And I believe that the investors we talk to now and will develop in the future will bring some new kinds of developments and kinds of entertainment and health facilities that will definitely facilitate life, give a better lifestyle for the locals, and I see it as a very exciting future.
Thank you so much. Thank you to all of you, our panelists. Thank you to you, our audience, and to the Reality on Expo organizers. Thank you very much.